Chad Stayskull from Eagle Wealth Management, and I'm here with our educational economic update for April 2019. In this month's video, I'm going to discuss some of the major headlines that influenced markets in March. I also hope to provide some insight into what these developments could mean for you as an investor. Well, the first quarter of 2019 is behind us, and major domestic indices have posted a strong performance for the year. Between January and March, the S&P 500 has gained 13%, its best first quarter since 1998. The Dow Industrials and Nasdaq Composite also posted double-digit increases during that time. While all three indices were up in March, their monthly gains were relatively small. The S&P and Nasdaq were both around 2%, while the Dow hung on to a narrow gain. Questions about the strength of both global and domestic growth contributed to market performance during the month. Domestically, we had plenty to consider. The final reading of economic growth in the fourth quarter lowered to 2.2%. Despite this downward revision, real gross domestic product was up to 2.9%. However, the fourth quarter's slower pace reflected concerns that momentum from the 2017 corporate tax cuts may be starting to wane. We saw these worries play out as Treasury yields fell and the yield curve inverted. What this development means is that the yield on the short-term Treasury bills and notes exceeded that of the 5-year Treasury bond. This type of inversion hasn't happened since 2007. Some investors believe that this occurrence could mean that an economic slowdown may be on the horizon. During its March meeting, the Fed Reserve confirmed that economic activity growth has slowed. The Fed chose not to raise rates and removed any rate increase projections for 2019. Chairman Jerome Powell also reinforced that both economic fundamentals and labor markets remain strong. On the international front, the European Central Bank, or ECB, cut its estimate for 2019 economic growth to 1.1%. It also announced a new stimulus program. These updates contributed to market uncertainty, especially as both Canada and Australia also appear to have slowing economies. Wall Street reacted to this news by posting several days of losses. In addition, the ongoing question of what's going to happen with Brexit, it continued to play out in the background throughout the month. Although markets may be experiencing uncertainty regarding both global and domestic growth, all news wasn't negative in March. In the U.S., the latest data showed modest gains in personal income, new home sales, and consumer sentiment. Apparent progress in the trade talks with China also led to U.S. markets to end the month on a high note. As you can see, there's a lot of moving parts and key perspectives are affecting investors in different ways. We will continue to monitor these developments in April and try to determine what may lie ahead for economic growth, both in the U.S. and abroad. Well, that's it for this month's educational economic update. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please feel free to give us a call at 541-330-0220. We'd be happy to talk with you. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of April 2019.